There's growth and income opportunity in retail and in energy, and our growth and income stock strategist Todd Bunton is going to show us exactly where it lies. He's here with us now. On the retail side, it lies with Macy's, apparently.
Yeah, very popular name we all know here in the U.S. Founded in 1929. They have a national presence, about 800 stores all across the U.S. They also own 37 Bloomingdale stores. A lot of people don't know that they have that brand. They're more localized. They're only in 11 states. But the company's been doing very well. Coming out of the recession, since 2009, they've reported double-digit increases in earnings per share every year since '09, and that's been driven by about a 4 to 5% increase in same-store sales. And that was on display the last quarter. They reported earnings on February 26, delivered another solid beat. It was actually its 11th consecutive positive earnings surprise, and they saw same-store sales in the quarter up 3.9%. A lot of that's been driven by their online channel too. Macy's.com and Bloomingdale's.com been very solid for them. And if you look, analysts have raised their estimates considerably higher off the strong beat. Sent it to a Zacks rank of 1, which is a strong buy rating. But the two biggest factors of the Zacks rank are agreement and magnitude of analysts' estimates. So you can see analysts have unanimously raised their estimates off the beat. And the jump up in estimates for fiscal 2014 and 15 has been pretty decent. You can see estimates rising higher. That's why it's a Zacks rank of 1. And solid growth potential too. Like I said, the company's delivered double-digit earnings per share growth the last few years. Analysts expect that trend to continue over the next couple years. Management actually gave outlook for 2000. It's their fiscal 2014 year of 3.5% same-store sales growth.
Wow.
Yeah, so that trend's supposed to continue. Analysts expect about 13% earnings per share growth this year, 13% growth next year. On top of that, they pay a dividend that yields 1.9%, very solid yield. They did cut that back in 2009 during the depths of the Great Recession, but they've doubled that dividend every year since then, and it is above pre-cut highs now. So very solid income opportunity as well, and you're getting all that at a very reasonable price. They trade at about 10 times forward earnings. Historically, they trade at 12 times, so it is a discount to that. The industry average is at 14 times, so could be good total return potential this year.
All right. And then on the energy side, we have UNS Energy. UNS, the ticker symbol. No surprise there.
Yeah, our customers in Arizona might be familiar with this one. They're a utility headquartered in Arizona. They own Tucson Electric Power, which serves over 400,000 clients in southern Arizona. They also own Unisource Energy Services, which provides natural gas in northern and southern Arizona. Usually don't talk about utilities a whole lot on here because they usually don't make it high up on the Zacks rank, but the company's delivered 3 consecutive positive earnings surprises. They reported on February 26th as well, delivered a 13% earnings beat. So good solid earnings momentum here. Analysts have been raising their estimates off that beat, sent it to a Zacks rank of 2, which is a buy rating. Based on consensus estimates, analysts expect 22% earnings per share growth this year, 18% growth next year. Very strong growth numbers for a utility, which is historically a low growth area.
Yeah.
And with that rising income comes rising dividends. If you take a look, since the year 2000, the company has increased its dividend at a 14% compound annual growth rate. Currently yields 3.7%, very solid yield, about twice as much as you'd get on a 10-year U.S. Treasury right now. And that dividend continues to increase year after year. They pay out about 60 to 70% of their earnings in the form of dividends. So as those earnings per share continue to increase, expect that dividend to continue increasing as well.
That's what we like to hear.
Yep. If you look at valuation, they trade about 17 times forward earnings. Historically, they trade at 15 times, so it is a premium to that. But given the strong growth potential over the next 2 years, that premium seems pretty justified.
Okay, do you own either of these?
I do not.
All right, check out other stock picks in the form of our Bull and Bear of the Day and other stock picking strategies on our website, Zacks.com. If you're not there already watching this video, get on over there because they're there and they change frequently, so check back often. With Todd, I'm Terry Ruffalo.